Ever get that feeling where you need to understand the nuts and bolts of a massive industry, but you just don't have the time to wade through endless reports?
Yeah, you want to cut straight to the point, right?
Exactly. You want to grasp what really matters.
Yeah.
And that's what we're trying to do here today.
We're taking one of those seemingly complex sectors and just pulling out the key insights, the stuff that gives you a real understanding of what's going on under the surface.
And this time, it's all thanks to you, our listeners. We're diving into Newmont Corporation, ticker NEM.
Right. Following up on that request to get a grip on a major player in mining.
So, Newmont, they're a global leader, mostly gold.
Mostly gold, yeah. But they're also pretty significant in copper, silver, zinc, and lead, too. A true giant in the space.
Okay. And to get our arms around this, we've been digging into a pretty comprehensive investment analysis report. That's our main source material.
Right. And our mission, basically, is to pull out the most crucial bits about Newmont's business, their management, the financials, market position, the essentials.
So you get a clear, efficient understanding of what makes this company tick.
Exactly. And hopefully we'll uncover some surprising details along the way.
Okay, should be interesting. So let's start at the beginning. What exactly is Newmont's core business? How do they actually make money?
Fundamentally, they discover mineral deposits, then they build and run mines to get the metals out.
Okay.
Gold is the big one. It was about 85% of their sales revenue back in 2024.
85%? Wow.
Yeah. But they also produce and sell concentrates of copper, silver, zinc, and lead.
So they sell the raw stuff?
Pretty much. They sell refined gold bullion, which is their biggest income source,
Okay.
and also those metal concentrates on the global markets.
And where do they sit in the global picture? Are they a big fish?
Oh, absolutely. That's putting it mildly, really. Newmont is the world's largest gold producer.
The largest.
By volume, yes. To give you some scale, something like 5% of all the gold mined globally in 2024 came from Newmont.
5% of the world's gold. That's huge.
It is, and that position was really cemented by their acquisition of Newcrest Mining in late 2023. That was a major move.
Right, the Newcrest deal. What did that add?
It added 11 long-life operations and 3 big development projects to their portfolio.
So more mines, more production.
Exactly. Looking ahead, they're expecting to average around 6 million ounces of gold and about 150,000 tons of copper per year over the next decade.
That scale must give them some clout.
Definitely. Significant negotiating power with suppliers, for instance. And, it puts them in a strong position for potential future deals in an industry that's still consolidating.
Makes sense. And they're not just in one place, are they? You mentioned global earlier.
Not at all. Truly global footprint. They've got mines and projects across North and South America, Australia, Papua New Guinea, and Africa.
Wow. Okay, so what's their guiding principle? What are they trying to achieve with all this activity?
Well, their stated primary goal is to create value and improve lives through sustainable and responsible mining. That's the official line.
Sustainable and responsible mining.
Yeah, and a key part of that is focusing on what they call Tier 1 assets.
Tier 1, what does that mean exactly?
Generally, Tier 1 means mines with a long life, usually over 10 years, high production rates, like, say, over 500,000 gold equivalent ounces a year, and crucially, operating costs in the lower half of the industry average.
Ah, so profitable and long-lasting.
Right. And ideally located in politically stable regions with established mining laws.
Okay, got it. Now, thinking about the wider market, are things looking good for them right now? Any major trends?
Yeah, there are definitely some supportive trends. Gold prices, as you've probably noticed, are quite high, trading above $3,200 an ounce as of May 2025.
Which is great for a gold miner.
Absolutely. And that's largely fueled by, economic uncertainty, geopolitical tensions, even the effects of U.S. tariffs. Gold often becomes that safe haven asset.
People get nervous. They buy gold.
Pretty much. Some analysts are even talking about gold potentially hitting $3,500.
Wow. And it's not just gold, is it? You mentioned copper earlier.
Correct. Copper's got strong growth potential, too. Think about electric vehicles, AI infrastructure build-out, more industrial automation.
All need copper. Lots of it.
Exactly. So demand is rising significantly. We could see record prices, maybe around $12,000 a ton this year. Goldman Sachs is even forecasting a pretty big supply deficit by 2026.
A deficit, so demand outstripping supply.
Which would likely push prices even higher. Good news if you're producing copper.
So sounds like favorable wins for their main products. Who are they up against? Who are the other big players?
Their main competitors are generally seen as Barrick Gold, ticker GOLAD, and Agnico Eagle Mines, that's AEM.
Barrick and Agnico Eagle. How do they stack up? like cost-wise?
Well, it's always interesting to compare. If you look at Q1 2025 figures, Agnico Eagle actually reported a lower all-in sustaining cost, or AISC.
AISC.
Yeah.
That's like the total cost to produce an ounce of gold, right?
Exactly. Agnico's was $11,183 per ounce with a really healthy margin of 59.1%.
Okay, and Newmont.
Newmont's AISC in that same quarter was higher at $1,651 per ounce, and their margin was 43.9%.
Quite a difference. Why is Newmont's cost higher?
Well, it's important context here. A big part of that is likely due to the ongoing integration of Newcrest operations. That takes time and money.
Merging everything together.
Right. And they're also actively selling off some other non-core assets, so their portfolio is kind of in flux right now, which impacts costs temporarily.
So they're reshaping things strategically. Makes sense.
Yeah.
What about regulations? Is that a big deal in mining?
Oh, absolutely. Huge. Mining operates in this complex web of rules, local, national, international. Covers everything from environmental protection, land use,
Worker safety.
community relations.
All of that, yes.
Yeah.
Newmont really emphasizes its commitment to meeting and often exceeding these regulations. They talk a lot about collaboration with local stakeholders, like their agreements with First Nations in Canada.
It sounds like a tough industry to just jump into. What stops near companies from competing easily?
Yeah, the barriers to entry are really substantial. First off, capital. Just immense amounts of money needed for exploration, building mines, infrastructure, billions, presumably.
Easily. Second, you need serious geological expertise just to find deposits worth mining.
Finding the treasure.
Right. Then there are the incredibly long lead times. It can take years, sometimes decades, from finding something to actually producing metal. You've got permitting, construction.
Bureaucracy and building.
Yep. And then there's the social license to operate. Getting communities on board is critical and often really difficult.
Can't just show up and start digging.
Definitely not anymore. And finally, companies like Newmont just benefit from huge economies of scale. It's hard for a newcomer to match their efficiency.
Okay, so it's a tough business. Newmont's the biggest. What specifically gives them an edge over Barrick or Agnico Eagle? What are their competitive advantages?
Well, there are several things. One big one is their brand reputation, especially around ESG, environmental, social, and governance.
ESG is huge for investors these days.
It really is. And Newmont has been a leader on the Dow Jones Sustainability Index for like 9 years running. That helps attract investment, and it's crucial for maintaining that social license we talked about.
Okay, reputation matters. And being the biggest must help with costs, right? Even with the recent integration bump.
Exactly. Economies of scale. They can buy supplies cheaper, manage global operations more efficiently. Even though their AISC went up recently, their sheer size lets them tackle massive, complex projects that smaller outfits just couldn't handle.
Any network effects?
No.
Like, does being big attract more partners or opportunities?
In a way, yes. Their long history and global presence mean they've built up deep relationships with governments, communities, suppliers, financial institutions.
Trust and connections.
Right. Those can smooth the path for permits, create more stable operating environments. It all adds up over time.
What about switching costs? If I'm buying gold, can I easily switch from Newmont to Barrick?
For the end buyer of the metal, yeah, pretty much negligible switching costs. Gold is gold. But for Newmont itself, there are huge implicit costs tied to their existing mines.
How so?
Well, think about the massive infrastructure at each site, the specialized workforce, long-term supply deals they might have. You can't just pick up and move a giant mine. It's incredibly complex and expensive to significantly change those operations.
So their physical assets are sticky in a way.
Very sticky, and those assets themselves are a major advantage. Their portfolio of Tier 1 operations is key.
Right, the long-life, low-cost ones in good locations.
Exactly. Plus, they have the largest gold reserve base in the entire industry, and significant copper reserves, too. That's literally money in the ground waiting to be mined.
And the know-how to get it out.
Absolutely. Their technical expertise in exploration, development, and operating these complex mines is a massive asset.
Putting it all together, it really does sound like a business that would be incredibly hard to copy from scratch.
It really would. You'd need, well, huge amounts of capital, incredible luck finding the right geology, decades for development, top-tier technical skills, the ability to navigate mountains of regulations.
And you'd need communities to actually let you operate.
Critically, yes.
Yeah.
The social license, it's a very, very high hurdle for any potential new competitor.
Okay, let's switch gears a bit and talk about management. Who's running the show at Newmont?
The president and CEO is Tom Palmer. He took over in late 2019.
Palmer. What's his background?
He was actually key in the Goldcorp acquisition before becoming CEO, and then he led the huge Newcrest deal in 2023. He's got a long career in mining, including senior roles at Rio Tinto before Newmont.
So experienced.
Very experienced. The general view is that he heads up a capable team focused on long-term strategy and, well, transforming the company through these big deals and portfolio changes.
Mining isn't without its incidents, though. How does Newmont handle crises or challenges? Safety issues, environmental concerns?
Yeah, they've definitely faced challenges. There were some tragic safety incidents in 2024, unfortunately. Afterwards, they did a full review of safety systems and brought in this always safe commitment for 2025.
So a reaction to improve things.
Right. Historically, they've also faced protests and scrutiny over environmental and human rights issues in some regions, sometimes leading to project delays.
Any current issues?
Well, there's an ongoing class action lawsuit, Caras v. Newmont, which alleges they made misleading statements about their 2024 outlooks. That's something they're dealing with.
Okay.
But on the other side, they have shown they can be proactive with community relations. Like, they recently reached an agreement with the union at their big Penasquito mine after a dispute.
Trying to be transparent then. How's their communication?
They seem to make an effort. They put out detailed annual sustainability reports on taxes and royalties paid.
The standard corporate stuff.
Yeah, plus regular investor updates, quarterly earnings calls, dedicated investor relations teams. They communicate regularly.
And overall ethical reputation. You mentioned the Dow Jones Sustainability Index earlier.
Right. They consistently rank as the top miner on that index, which is significant, 9 years running.
But, I sense a but.
Well, it's worth noting that Sustainalytics, another big ESG rating agency, gives them a medium risk rating currently. And they flag a significant controversy level related to certain operational incidents and community impacts.
So a leader in ESG, but not perfect. Still facing challenges.
Exactly. It's a complex picture, as it often is with major resource companies.
Okay. So this experienced management team, how do they decide where to put the company's money? Capital allocation.
Their main strategy is prioritizing investment in those core Tier 1 assets. Keep the best mines running efficiently and find ways to extend their lives or expand them.
Makes sense. Focus on the crown jewels.
Right. For 2025, they've guided significant capital spending, about $1.8 billion just for sustaining current operations, and another $1.3 billion for developing new projects.
What kind of projects?
Key ones include Ahafo North in Ghana, that's set for commissioning in 2025 and should add a lot of production. There's the Tanami Expansion 2 in Australia, aiming for a 35% production boost by 2028. And ongoing work at Cadia in Australia, too. These are crucial for growth and replacing mined-out reserves.
And the huge Newcrest acquisition, how does that fit into the capital plan?
That was clearly a massive strategic investment, $16.8 billion, all stock, back in November 2023. It dramatically increased their gold and copper base and expanded their global footprint.
A game changer.
Absolutely. And following that, they've been very actively selling off assets they consider non-core.
The ones that aren't Tier 1.
Pretty much. They've already brought in over $2.5 billion in net cash from sales this year and expect maybe up to $4.3 billion gross in total. It's all about streamlining the portfolio to focus on those high-quality, long-life assets acquired from Newcrest and their existing Tier 1 base.
They've also been buying back shares, haven't they?
Yes, quite aggressively. They have a $3 billion repurchase program running through October 2026.
How much have they bought back?
By the end of 2024, it was $1.2 billion, then another $348 million in Q1 2025 alone, so over $1.5 billion recently.
Why do that?
Partly to offset the new shares they issued for the Newcrest deal, so existing shareholders aren't diluted too much. And it's also a way to return capital directly to investors.
What about dividends? Are they paying those too?
They are. They declared a $0.25 per share dividend for Q1 2025, same as the previous quarter.
Consistent lately, then.
Yes, but the total for 2024, which was a $1 per share, was actually down from previous years. So the payout has varied. Future dividends are always at the board's discretion, depending on performance and outlook.
Right. Now, a key metric for judging management is return on invested capital, ROIC. How's Newmont doing there?
It's showed a big improvement recently. ROIC jumped to 11.4% in 2024, which was way up from just 1.7% in 2023.
That's a huge jump.
It is. More recent trailing 12-month data as of May 2025 shows it around 8.38%. According to ChartMail, that actually beats about 95% of their peers right now. It is, though their longer-term 3-year average ROIC is still below the industry average. But that strong free cash flow they generated in Q1 25, $1.2 billion, definitely helps support all these capital allocation moves like buybacks and project investments.
Okay, so management seems focused making big strategic moves. Let's dive deeper into the financials. What are the key numbers we should know?
All right, looking at the latest data, mostly Q1 2025, market cap is around $54.1 billion. Price to earnings ratio, or PE, is about 10.97.
Relatively low PE.
Yeah, suggests maybe the market isn't assigning a super high growth multiple right now. Q1 revenue was strong, $5.01 billion. That's up 24.5% year over year.
That's significant growth, driven by Newcrest and gold prices?
Exactly. Higher production volumes from Newcrest assets and those higher realized gold prices were the main drivers. Even though they sold some assets, the new volume more than compensated.
What about profits? Margins?
Margins looked really good in Q1. Gross profit margin was almost 58%, operating margin was 55%, and net margin nearly 38%.
Wow, very high.
Hold on, though. Those numbers were significantly boosted by a gain from those asset sales we mentioned.
Ah, a one-off gain.
Right. So the underlying margins are strong because of commodity prices, but maybe not quite that high on a recurring basis. Still, profitability was definitely robust in the quarter.
Okay. What about debt?
Their balance sheet looks quite conservative. Debt-to-equity ratio is low, only 0.24. And net debt to adjusted EBITDA is very low, too, just 0.3 times.
So, not much leverage, lots of financial flexibility.
Precisely. It indicates lower financial risk. And they generated record free cash flow in Q1, $1.205 billion.
Record free cash flow. That's huge.
It really is. Gives them a lot of firepower for investments, debt paydown, shareholder returns.
One more metric, price to book.
Price to book ratio is around 1.73.
Meaning the market values the company at about 1.7 times the accounting value of its assets?
Correct. Suggests investors see value beyond just the book figures, perhaps expecting future growth or valuing those reserves highly.
Okay, strong recent quarter. But what about consistency? Have earnings been stable over, say, the last 5 or 10 years?
There's definitely been volatility, which isn't unusual for a commodity producer, you know?
Tied to metal prices?
Right. They actually had net losses in 2022 and 2023. That was due to factors like lower average prices at times, costs from the Newcrest deal, some asset write-downs.
But things turned around in 2024 and early 25.
Big time. Strong recovery, largely thanks to higher gold prices and the benefits starting to come through from integrating Newcrest and selling off the non-core assets.
And dividends. You said the payout was cut recently, but seems stable now?
Yeah, they have a long history of paying dividends, but the amount per share has definitely varied. The reduction in recent years was notable. The current $1.25 quarterly level seems okay for now, but again, it's always up to the board based on future performance, not guaranteed.
Got it. And debt management, you said the ratios are low. Are they actively paying down debt?
They are. They made a point of reducing debt in Q1 2025, even redeemed some senior notes early. They have an investment-grade credit rating and seem committed to keeping debt manageable.
Okay. One last financial bit. Working capital. How efficient are they there?
In Q1 25, changes in working capital actually used up some cash. It slightly offset their operating cash flow.
Meaning?
It suggests more cash got tied up in things like unsold inventory or maybe customers taking longer to pay during that period. It's just something to keep an eye on. Ideally, you want working capital managed efficiently to free up cash.
Right. Don't want too much cash stuck in inventory or receivables. Okay, so financially, a strong recent performance, conservative balance sheet, but some historical volatility. How does the market feel about Newmont stock right now? What's the sentiment?
As of mid-May 2025, sentiment seems cautiously optimistic, I'd say. Zacks gives it a #2 buy rating, strong VGM scores value, growth, momentum.
What about analysts?
Mostly positive. The consensus leans towards a buy. Trading volumes have been high too, so lots of investor interest.
The technical signal.
Technically, the price is below its 50-day moving average, but still above the longer-term 200-day. The RSI, Relative Strength Index, is getting close to oversold levels.
Which some traders might see as a potential entry point.
Could be, yeah. For technical traders, at least.
And what are analysts predicting for the price? Any targets?
Generally, they see significant upside. The average target price is somewhere in the $63 to $66 range. That's quite a bit higher than where it's trading now.
So analysts are bullish?
Seems so. UBS even upgraded them to buy back in April, likely reflecting optimism about gold prices staying strong and the Newcrest integration paying off.
What recent news might be moving the stock?
Well, the strong Q1 results definitely helped. Completing those asset sales was seen positively too. Publishing their sustainability reports reinforces that ESG angle.
Any negatives?
The ongoing class action lawsuit is a bit of an overhang, and just broader worries about the economy, maybe the impact of those U.S. tariffs we mentioned, that creates some uncertainty.
What about short sellers? Are people betting against the stock?
Short interest is actually pretty low, around 1.7%. Suggests not many are making big bets on the price falling significantly. The borrow fee is low, too.
But you mentioned options trading.
Yeah, options activity has been quite active. That often suggests more near-term speculation, people making bets on shorter-term price movements, both up and down.
Okay. And who owns the stock? Is it mostly individuals or big funds?
Heavily institutional. Somewhere between 75% and 87% of the shares are held by institutions.
Or like who?
The biggest holders are the usual giants. Vanguard has around 12%, BlackRock around 9%.
And insiders, management.
Insider holdings are quite low, actually, around 0.24%. There have been some recent insider sales, but they look mostly like routine planned transactions. No single dominant shareholder apart from those big index funds.
How's their corporate governance? Is the company set up to look after shareholders?
It looks pretty solid generally. The board is mostly independent directors. They have shareholder-friendly things like proxy access, majority voting for directors.
Pay linked to performance.
Yes, there's a stated link between executive pay and company performance, and shareholders have generally supported their pay packages in the say-on-pay votes. They also seem to emphasize transparency and governance.
Okay, we've covered a lot of ground. Let's think about risks. What are the main potential downsides or challenges Newmont is facing? Can we do like a quick SWOT summary?
Sure. Based on the analysis, the strengths are clear. Market leadership, great assets, strong financials, ESG leadership.
Weaknesses?
Weaknesses would be the complexity of integrating Newcrest, those recent cost pressures we discussed, and that history of some safety and environmental issues, plus the lawsuit.
Opportunities?
Opportunities definitely include the high commodity prices right now, potential gains from selling more non-core assets, and there are a pipeline of growth projects like Ahafo North.
Then threats?
Threats are always there in mining. Commodity price swings are the big one. Geopolitical risks in their operating regions. Inflation hitting costs. Regulatory hurdles. Environmental or social issues flaring up, and yeah, the potential negative impacts from a global slowdown or those U.S. tariffs.
Okay, let's zero in on those tariffs from 2025. How exactly might they hit Newmont? It sounded like a mixed bag.
It really is. For the gold market itself, the tariffs could actually be a positive.
How so?
More economic uncertainty tends to push investors towards safe havens like gold, so tariffs could indirectly support or even boost gold prices. Good for Newmont's revenue.
But what about the cost side? They use a lot of imported stuff, right? Steel, machinery.
Exactly, and that's where it gets tricky. Copper, their other main metal, got an exemption as a critical mineral, which helps.
Okay, good for copper.
But tariffs on imported machinery, equipment, steel, aluminum, those are likely to increase Newmont's costs, both operating costs and capital costs for new projects.
How much?
Some estimates suggest potential price hikes of like 17–18% on certain equipment, and the 25% tariffs on steel and aluminum will definitely bite into their budget.
So they might need to find new suppliers, adjust things.
Could be. They might need to adjust supply chains, which can add cost and disruption. Plus, if the tariffs slow down the broader global economy...
Less demand for industrial metals.
Potentially, yes. Less demand for copper, for instance. Although, again, gold might do well in that same scenario. It's complicated.
So, how well positioned are they to handle this tariff situation?
I'd say relatively well-positioned, all things considered. Their focus on efficiency helps. Their strong balance sheet gives them cushioning. And that copper exemption is a definite plus.
But they'll still feel it.
Oh, for sure. They'll need to manage costs very carefully and navigate those supply chain issues. It's definitely a headwind they need to manage.
Well, this has been incredibly thorough. A real deep dive into Newmont. Let's try and wrap up with the main takeaways for everyone listening.
Okay, so summarizing Newmont. It's the world's biggest gold miner, with a significant and growing copper business, too.
Benefiting from high gold prices right now.
Definitely. But also juggling the big Newcrest integration and keeping an eye on costs.
And navigating those new U.S. tariffs, which are a double-edged sword, potentially good for gold prices, potentially bad for costs.
That's a good way to put it. It captures the main dynamics they're dealing with right now.
It's been fascinating pulling apart the information from that report. Hopefully this gives you, our listeners, a much clearer picture of this major mining company.
Yeah, the goal was really to provide that shortcut, to get you well informed on Newmont, the context they operate in, and the key factors shaping their future.
Absolutely. And to leave you with something to think about, considering Newmont has these big bets on both gold and copper, and we've just discussed how global economic policies, like tariffs, might impact these metals quite differently.
Right, pushing gold up, maybe hurting copper demand.
Exactly. So how might a long-term investor think about weighing those contrasting factors when looking at Newmont's future? It really highlights that interplay between the big macro picture and the specifics of different commodity markets, doesn't it?
It certainly does. Something interesting to mull over.